Hey Bowtie Nation, Joseph Hogue here with possibly the biggest trend of the decade, one every investor needs to get in front of. More than 38 million Americans have quit their job in the first 10 months of this year, with a record-breaking 4.4 million in September alone. They're calling it the Great Resignation, the mass exodus of workers to become freelancers and putting that gig economy into overdrive. According to a study by Upwork, more than 59 million Americans freelanced this year, more than a third of the entire workforce, and this trend is just getting started. It is a gold rush for workers, being able to control their own hours and earnings, but like any gold rush for investors, you want to be providing the picks and shovels. Investing in the companies providing those services and making this gig economy possible. Now, of course, the problem is most of these stocks are already extremely expensive. A revenue growth of 30 and 40% a year has attracted a wave of investors, pushing these stocks up to records. And stocks in this theme are already up 150% since early last year. You need to know how to value these stocks and which to buy. In this video, I'll show you what's driving the Great Resignation and how the gig economy is creating a new opportunity for investors. We'll look at 2 funds for instant exposure, and then I'll reveal the 5 best stocks to watch in the space. I'll be using the Moomoo app throughout the video to find and analyze stocks in this revolution of the gig economy. Moomoo is a commission-free trading app with the analysis and real-time market news to help you invest better. You'll get free level 2 quotes critical to making the best trades, option analysis to combine with your stocks, and more than 20 chart tools to help you find the trends you need to know. The app offers some of the best trading hours I've seen with pre-market and after-market access from 4 a.m. to 8 p.m. Eastern. And that means you can trade before the rest of the market when important news hits. This app is built for stock traders, but also has some great features for those long-term investors out there. Features like custom stock screeners and newsfeed from CNBC. It takes less than 5 minutes to open an account, and there's no minimum to start. Use the link I'll leave below, and you'll get 5 free stocks worth up to $3,500 each when you start investing on Moomoo. Let's get into it, but you know we can't get started here on the channel without that special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Nation, the number of people quitting their jobs is increasing, with more than 4 million in each of the last 3 months. Before this year, that number had only reached 3.5 million twice in the last 20 years. And what's even crazier here is there are now 11 million job openings for just 7.5 million unemployed looking for work. That's total job openings in blue, and the number unemployed in red here, with those lines crossing in May of this year. Nation, this is an historic trend, and you need to be prepared for how it will affect stocks. And this is all being driven by that rise in the gig economy, the opportunity in freelance work where people can set their own hours and control how much money they make. Looking back on that Upwork study, more than 2 in 3, 67% of freelancers are optimistic about their career, with 65% expecting their income to increase in the coming year. 9 out of 10 freelancers believe the best days are ahead of them for that work-for-home trend. Now first, I want to show you how to find stocks in this theme, how to start your list, and it's actually the same place you're going to find your first 2 opportunities. There are 2 exchange-traded funds, ETFs, that invest broadly in stocks across this theme. Now, not only are these going to be a good start to your portfolio, but it's a great way to find other stocks to research further. First is the Direxion Work From Home ETF, ticker WFH. This is a fund of 40 stocks driving that adoption of remote work, including emergent technologies in cloud, cybersecurity, project management, and remote communications. And now remember, for any fund, you can go to its website and look at all the stocks it holds. It's a great way to start your list of stocks in a theme to research further and invest in only the best. Besides these top 10, you can download a list of all the stocks held in the fund, and looking through these stocks, this one is much more on that enterprise side, enabling businesses to remote work their employees. So you get larger tech stocks like Vonage, VMware, and IBM versus some of the freelancer platforms and the gig economy stocks that we'll see in the next fund. The SoFi Gig Economy ETF, ticker GIGE, offers a different focus here, with 70 stocks targeted more towards the user or freelancer side of this theme. Here we're really getting into the companies providing those picks and shovels for enabling freelancers and gig workers themselves to make that transition. Within just the top 10 stocks, you've got some popular work-from-home companies like Shopify, Roblox, and Square. And just like this other fund, you can download a full list to see every stock it's holding. Now there's 2 ideas I want to point out about these funds, and then I'll reveal my 5 favorite stocks to watch in this Great Resignation theme. First is that either of these is a great way to get that overall exposure to the theme and a lot less stress investing. These stocks are volatile with huge swings in the price, so It's nice to have that diversification across dozens of companies so you can ride that general trend higher but aren't worried about any one stock crashing. But the funds are also a great way to start your search. Mine their holdings for that initial list of potential investments and then narrow it down to buy only the best. Because as much as I think either of these two funds could do really well in this trend, I don't think every stock is going to do as well, or really that it even belongs in a gig economy list. And just in the top 10 stocks within that gig economy fund, you've got names like Spotify and Lending Club that, while they might be good companies, in my opinion, don't really qualify for this freelancer theme that we're looking at. So maybe get a little of that broad exposure with some money in one or both of these funds, but then pick a few of your favorite stocks for extra weight in this theme. Here I'm going to share my 5 favorite and show you how to analyze these types of growth stocks. And first, here is a site I've used for years in my own business, Upwork, ticker UPWK. A traditional freelancer marketplace where businesses or others post jobs they need done, and then freelancers bid on a price for that project. The platform takes a fee from 5 to 20% from freelancers, as well as a payment fee from those hiring, and earns on a client subscription program as well. Revenue was up 32% in the most recent quarter and up 24% last year with over 750,000 active clients. That number of active clients grew 25% last quarter and more than 20% in each of the last 3 quarters this year. I've been using the site for about 5 years and I've spent more than $35,000 paying freelancers for editing and blog management and other tasks. And here's the kicker. Here's why I think this company could continue to do so well. Even though the fees are a little higher than some of the other alternatives, I stay on the platform because it makes managing all of it so easy. That's why I think the site can keep growing and that client base and its revenues. Your shares trade for just 9 times on a price to sales basis, one of the least expensive in this list. And while the 32% annual revenue growth is the lowest, this is definitely one you want to watch. Among the 8 analysts covering the stock, we see a buy rating and an average target price of $65 a share, more than 91% above the current share price. Next here is a company that works for both freelancers and in that remote work trend, DocuSign, ticker DOCU. No other company can match DocuSign's scale in that e-signature market with 1.1 million users, and it's just starting to expand into an estimated $50 billion market opportunity in these other services. E-signature contracts are becoming the norm, and the company is evolving into other services like notary and cloud contracts to grow that market size. Revenue was up 42% in the third quarter and up 49% in the last fiscal year. And what I really like about this one is that 97% of its revenue is on that subscription model, booking a consistent sales every single month, rather than that one-time purchase model. The shares trade for a price of 14.3 times revenue, so quite a bit more expensive than Upwork, but about average for this group. The growth rate, though, makes this one a can't miss and brings down that relative valuation. More than 20 analysts covering the stock with an average 3.9 out of 5 for a solid outperform rating. The average target price of $236 is 62% higher, and even the lowest target is above the current price. We've still got 3 more stocks to watch, but I want to show you how to analyze these gig economy stocks to make sure you're buying only the best. Now, these stocks have been extremely popular over the last 2 years, but most have come off that popularity, and you need to know how to analyze them. First, here is a valuation method that we've talked about in the past, using growth to adjust that price to earnings or price to sales basis. Because you see, with traditional price multiples like the price to sales or price to earnings, just about any of these growth stocks is going to seem ridiculously expensive. Even the cheapest in the group, shares of Upwork, trade for 9 times the revenue booked over the last year. If you were to compare that with the price to sales ratio of, say, IBM, trading for just 1.5 times revenue, there's no way you would put your money on Upwork. Why pay more than 6 times for a stock on that price to sales valuation? But then adjusting your analysis for these growth rates puts everything into perspective. Upwork was able to grow its revenue by 32% over the last year, while IBM sales grew at a measly 0.3% rate. If we adjust the price to sales ratio by these growth rates then, so 9.1 for Upwork divided by 32 for its 32% growth rate, and then 1.5 times sales on IBM divided by its 0.3 growth rate, we get a price to sales to growth of 0.28 for Upwork and 5 for IBM. The growth company is by far the better price because its sales are growing so much faster. So don't just look at that price to earnings or price to sales ratio to compare these stocks. Adjusting them by that growth rate to see the relative valuation is just as important. Now, second here, and this is something professional analysts do, but is completely neglected by most investors, actually reaching out to users of these companies for that deep qualitative research. I started working from home in 2013, so I've got fairly deep experience with these gig economy stocks and which have the most competitive advantages. If you don't have that kind of experience, reach out to someone who does for that behind the scenes research. You might not see it watching CNBC or listening to analyst recommendations, but this is the kind of in-depth research that analysts do, digging into those companies beyond just the numbers to find which have the best breed of growth. Monday.com, ticker MNDY, is more on the enterprise side of the theme, providing work and process management software for business customers. Now, this is another one with a strong subscription-based model and a really sticky service because once clients set up that workflow software, they're not going to want to have to set it up again with a different platform. That means strong revenue growth as the company keeps those existing customers and builds on it each month. Sales grew 95% in the third quarter and 124% annualized in the 3 years through 2020, by far the fastest growth in our list. The company estimates it's in a $56 billion market between project management, software development, and other applications. Our shares are the most expensive in our list, though, at 51.7 times on that price to sales basis, but with that growth rate, it's actually one of the cheapest on a growth adjusted basis. 11 analysts rate the stock with an average buy recommendation and a target of $428 a share, about 45% above the recent price, with even the lowest recommendation at $335 a share. I'm not sure we could talk about gig economy stocks without talking about Zoom Video Communications, ticker ZM, one of the most popular stocks of last year. While the shares have come off that popularity and down 60% from the peak, the company still booked revenue growth of 35% in the most recent quarter to just over $1 billion. What's more, the number of customers spending more than $100,000 a year on the platform were up 94% to over 2,500 last quarter. Management is guided to sales of almost $4.1 billion for 2022, which puts the shares around 13.3 times on that price to sales basis. And this stock is trading in oversold territory, and with the growth, it should help it take it higher over the long term. We've got 32 analysts covering this stock with an average outperform rating and a target price of $330. And that's more than 78% higher on a strong growth rate and the stock coming into that value territory. Another freelancer platform I've used a lot in the past, Fiverr International, ticker FVRR, and this one has a unique business model that gives it a competitive edge over some of the traditional platforms. Instead of clients posting projects for freelancers to bid on, Fiverr has freelancers post their projects for a set price. Businesses and clients search the platform for what they need and then get their projects customized. Now, it's a great low-cost option because freelancers can standardize their projects and then provide minimal customization for each client. The platform has a strong user interface for both sides, and I've used it more than a dozen times as a client since starting my online businesses. The company estimates a $115 billion global market, collecting fees just over 5% on the buyer side and 20% from freelancers. That leaves a lot of room for growth on last year's $190 million in total revenue. Now, sales grew at 42% in the most recent quarter and 77% last year. Shares trade for 16.2 times on that price to sales basis, so a little higher than some of these stocks, but with that 42% growth rate, it's actually the cheapest on the list. On 9 analyst targets, we have an average price target of $212 a share, just over 62% upside and a 30% return to the lowest target. Don't forget to get your 5 free stocks from Moomoo with a link in the description below. You'll get a free stock just for opening your account and another when you deposit any amount and start investing. Click on the video to the right for the 7 stocks that will drive the electric vehicle revolution. 7 stocks that will change the way we drive. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.